Hello again, Bronwyn Knight is with us from Grit. A warm welcome to the Proactive Investor Studio here in London, Bronwyn. Good to see you.
Thank you.
You have only just listed in London in July. How's it going?
So it's actually just been an unbelievable journey for us, and we listed on the 31st of July, main board at London Stock Exchange, and our company is a real estate company. We do commercial real estate across the African continent. So we've also now come to our year end, which is June, and it's been quite exciting to actually produce our first set of results in the London market. So to date, it really has been a mammoth task to get onto the main board from a governance perspective, but we've been able to achieve that. And now it's just to build off the platform that we've created as a real estate business.
And you've raised capital, and that of course means portfolio expansion. What are your targets?
Absolutely. So we raised $132 million, and we were really excited about that. We brought on new institutional UK investors, so 12% of our share register is actually owned by UK institutional, which is fantastic. And we've actually fully deployed that money. So we've brought down our LTV to close on 40%. So our loan to value, it's quite important, especially through the UK market, to sit around 35 to 40%. So that's our target. And we've deployed that money now. We've entered Ghana as a new jurisdiction. So we've bought some commercial office and industrial space in Ghana. And our entire strategy is a multi-geography strategy. So we've deployed those funds to further that strategy and really expand our geographic presence across Africa.
We'll talk about those specific geographies, if we may, in just a moment. But if I can just be clear about, for our investors who are watching you for perhaps the first time, which spaces you're in. If you could list it for me, it's hospitality.
Yes, so the sort of multi-sector that we will look at. So our entire investment strategy is really built around the strength of the lease and the strength of the underlying counterparty. So we both...
But retail,
offices, industrial, corporate accommodation, hospitality. So we look across any sector, provided the underlying leases, then the strength of the underlying tenants.
Okay, and let's talk those geographies then. You mentioned Ghana.
Yes.
What about Mozambique? I see that's in your portfolio, and of course there's always an eyebrow raised with Mozambique.
Absolutely. So we're in 7 geographies. I always use the term soft Africa, which is investment grade Africa. Investment grade Africa is Morocco, Botswana, Mauritius. We then go into sort of higher growth Africa, and that's a country like Mozambique. So we've owned our portfolio there for 4 years, been very focused on international corporates. So we've actually owned our portfolio through really big macro challenges around the government, and it's been one of our better performing portfolio. And what's differentiated our assets there is the international tenants. So we deal with the likes of Vodafone, Anadarko, Bolloré, Vale. So it's really the international corporate base, as well as the fact that we actually collect our revenues in US dollars. So we haven't had that underlying currency exposure. So from a performance perspective, we go for an asset base and a client base that's quite sticky to the macros, and Mozambique has been quite a good case study for us to actually demonstrate that. So we've obviously, from a jurisdictional perspective, we only want to have 25% of our portfolio exposed to one geography, and we're getting there as we grow the portfolio, and that's just a risk mitigant. So we've got exposure to North Africa being Morocco, into West Africa being Ghana, East Africa, Kenya, and then obviously the Mozambique into SADC. So we really, and where we're looking at Mozambique, we've had growth on that portfolio, we've had close on 6% growth on that valuation, that portfolio. So we still see it as one of our countries that we actually have significant competitive advantage into now. And there's a lot going on from a macro perspective and a lot of international investment coming into Mozambique. So we'll leverage off that going forward.
Let me pick up on one of the territories you mentioned there, Kenya. I know that's an area that you'd like to particularly expand in.
Absolutely.
Why?
So I think the aspect around East Africa and Kenya specifically is that it is really the gateway for distribution into Africa. So for us, it's very industrial focused. Kenya for us is really been a country that's demonstrated even through the previous elections that it's been able to really solidify itself as a global player. So we're quite excited with what's going on, and we see it as a gateway into East Africa on the distribution side. So we see our industrial focus and real estate focus actually being bolstered out of that region.
It's really interesting actually listening to your job. You've got these different property sectors, different economic drivers in each geography. How do you balance all those? How do you keep your eye and your focus on all of those areas being so different as they are?
Absolutely, and I think it was one of the elements when we first built this business for being criticised, actually being multi-geography and multi-asset class. But we saw it as a really good risk mitigant because these are emerging market frontier markets and they do go up and down. The actual other side of it is that you need an army to manage it. So we've built a business of close on 70 people across these jurisdictions. We often have to handle the property management, facilities management, letting ourselves, because you just don't have the sophistication into those markets. So for us, it really is around getting very strong local partners, being able to create some form of sophistication to those local partners. So it's really building a platform. Now being in 7 countries and really spending some time building this foundation, we're going to leverage off that for our growth going forward.
You've explained really well and comprehensively the recruitment, the team behind this, from the geographies perspective. From the investor perspective, we can't fail to notice the 9th consecutive dividend that has been delivered to investors. And of course, you aim to expand that investor base as well.
Absolutely. So for us, our total return is dividend. So we distribute out every 6 months. We listed in London at 8.5% dollar dividend yield. If you benchmark that to global REITs, we almost double that from a return perspective. But not only do we distribute and deliver a dollar dividend, but we also look at the net asset value growth. And we've seen 6% net asset value growth in our portfolio. So we're targeting a dollar return around 12 to 16%. And that is for Africa and really leveraging off the growth in Africa. So we're trying to bring institutional shareholders to Africa with a lot of the perceived Africa risk mitigated. So the international tenant base, the ability to actually secure hard currency leases, the ability to actually be multi-geography, multi-asset class, and really have a management team that's very hands-on managing that perceived Africa risk, but then giving investors access to the African growth story.
That demands a great deal of agility, doesn't it?
Absolutely, absolutely. And really just being present and being on the ground. And I think we sort of a very unique business proposition, and not many other players do what we do, just because it is so complex, and the fact that you really have to be in all of these countries, you really have to activate local presence, you really have to have local people that are employed in these jurisdictions that understand just the nuances of these markets. So Mozambique is Portuguese, Morocco is French speaking, so there really are those complexities. But if you can get a handle on that and have strong base in these countries, then the ability to grow, I mean, I always say it's only the tip of the iceberg in relation to the real estate development in these markets. You in markets like the UK that are so sort of developed and saturated, and you have so many different players in these markets. If you have a great platform, the ability to grow off that is fantastic.
We've talked a little bit about the different sectors: retail, hospitality, office space. You're heading for those corporate clients. Yes. But what about sector diversification?
So, for us on the sector diversification is really, I mean, we've seen so many players go into these countries being very commodity driven and really being overexposed when those economic drivers turn. So we want to focus on countries that are driven by different economic drivers. So if you look at Mauritius, it's very much driven around tourism. You won't see us doing retail in Mauritius. There's 1.2 million people in Mauritius. We don't think the retail market is deep enough for us to invest in there. But the hospitality side is the big driver. So we partner with owner-operated groups there. We do sell and lease back. We have the ability to partner with these groups, the ability to sign Euro leases, long-term leases. Somewhere like Morocco, which is agriculture, tourism driven. We also focus on those regions, something like Casablanca. Morocco is now seen as the gateway into Africa from North Africa. So really we're focusing on sort of different economic drivers out of these different markets. Ghana for us, we're really excited. It's come out of a really long slump and we see a lot of value accretion in that particular market. We've got a very strong partner in Ghana, and sometimes it takes years to invest in these countries. My partner and I have actually been looking at Ghana for 6 years now, and we've only just sort of pulled the trigger in relation to investment. So you need some patience in these markets too, but the cross geography, cross asset class allows us to grow this platform. And coming to London now and really going through a main board listing, seeking a premium listing, is really to tick the governance box. Because unfortunately Africa is tainted with the lack of governance, and we wanted to demonstrate that we could go through this vigorous regulatory process just to tick that box in the eyes of more conservative institutional UK investors.
So your hope then for a year from now, where's GRIP going to be in a year?
So, it's always, what's important is, one, we actually property people at the end of the day. So it's to really asset manage our current portfolio and deliver on what we said. We have a portfolio of close on $700 million now. We have the ability to double that in the next year. We just need to make sure that on our capital structure that we see the liquidity, we see the share price trading, the diversification of their shareholder base is absolutely key. And just the education process. So, it's really spending time on the road now, educating investors around what we've done and the growth that we see in these regions. So that's really what we're going to be doing in the next 12 months.
Well, we look forward to hearing more about that journey, but for the moment, Bronwyn Corbett, thank you very much indeed.
Thank you.